Hello, this is Professor Campbell with Accounts Receivable Roll Forward, a demonstration of technique. So let's take a look at our blueprint again. And remember that remembering and understanding is our first basic level, our foundational level. So in order to do application, you need to remember and understand something. You have to remember the concepts. In order to do analysis, you need to know what the application was, and you have to also know the remembering and understanding concepts. So in order to get to a prepare roll forward of trade receivables using various sources of data information, you need to do an analysis of whether or not the journal entry was proper, what journal entries go into your roll forward, and be also able to calculate any of the trade receivables, calculate credit losses, sales returns, calculate discounts, and also prepare any transfers. So you have to be able to know how those things work. So remembering application, analysis, it's like a triangle, it's a foundation. You have to build your way up to this analysis. So let's take a look at roll forward of trade receivables and the technique that we can use to make sure that our roll forward is correct. So this is some data that could be present in a TBS. Typically, the trial balance, the beginning balance, so this is the January 1st general ledger account. We can tell it's right after closing, it's post-closing trial balance because we have retained earnings and nothing else. So this is our January 1st opening balances in accounts receivable, and we have these transactions here identified. So let's take a look at our instructions for this. Okay, TBS, simple TBS here. We are going to do we're going to write up the journal entries for each transaction and then post the accounts receivable to the general ledger roll forward. Now, I know a lot of you are saying, but hey, isn't it faster to just post it right to the roll forward? Yeah, it's faster to make a mistake that way too. When you do the journal entries, whether you're doing them here in paper and pencil, or you're doing them on a piece of scrap paper on the side, or you're doing them in your head, you're going to do the journal entries of each one of them and how it affects the roll forward. I encourage you to do it by writing them out. So this is the technique for getting a roll forward correct. So I'm using a simple roll forward, and believe me, when you get into the test situation, you could get a lot more complicated transactions occurring in your roll forward. So let's begin. First, we take a look at our accounts receivable balance, and we look at our trial balance for that, and I have 13,600. Okay, so that's my beginning balance that I know. Then I have these transactions that go into it. So let's do these journal entries. So January 2nd, I have provided services to customers for cash. For cash means that I received cash of 13,100, and services to clients is sales. Sales of services rendered, okay, 13,100. January 6th, provide services to customers on account. So accounts receivable, I'm going to abbreviate 72,400, and sales 72,400. January 12th, I write off accounts receivables as uncollectible. So I need to credit accounts receivable and debit the allowance account. So I am taking money out of the allowance for uncollectibles. Okay, so I am going to debit that for 1,000. Normally a credit balance, when I take the money out, it reduces it, and the accounts receivable, I'm going to write off that person's accounts receivable by crediting that account for 1,000 for the bad debt. January 15th, I received cash from customers paying within the terms of 210 net 30. And they paid me in cash 11,760. What's the rest of my journal entry? Well, what's my journal entry when I'm posting cash received for sales discounts? Well, I have to debit sales discounts. It's a contra account to sales. My sales were already recorded previously. And so then I can write off the gross amount in accounts receivable. So how do I find out what the debit is to sales discount, and how do I find out exactly how much accounts receivable were discounted? All right, here's the math. All right, here's the math. I'm going to do this right over here. 2%, and then I find the reciprocal of that, and it's 0.98. And I take the 11,760 and I divide it by that reciprocal amount, and that equals 12,000. Simple subtraction gives us the discount amount. So my accounts receivable, gross, they use the gross method that was mentioned up here. So I have to credit accounts receivable, and then the balance here is 240. Okay, the 2% of 12,000 is 240. We can recalculate that and make sure that we are correct. So this is the way you find out the grossed up amount of a net cash received for something that was discounted using the reciprocal. Okay, write that down. You can use it for just about anything. It's always fun to know some mathematic gymnastics and remember them from your previous lessons and things like that. So now we received cash on receivables, and we received the cash, and the accounts receivable is credited. Debit cash, credit accounts receivable. On January 25th, we converted a note receivable for 2000. We converted an accounts receivable, for 2000 to a note receivable. So January 25th, note receivable, accounts receivable. Okay. And then paid cash for utilities during January. We can write that journal entry up because that's what the instructions say. Um, okay, but this particular entry is a distractor. It's just there to distract you. The instructions say to write up all the journal entries for the transactions, and we did so, even though we know it doesn't apply to accounts receivable at all. The other one that's kind of a distractor is this receiving cash for sales. It doesn't have anything to do with the accounts receivable. So now let's take a look at our roll forward and take a look at what gets added. We add to that the accounts, the sales on accounts. Okay, so sales on account, because they use the gross method, we are going to add 72,400. Follow the instructions. You'll probably get an Excel format in a test situation. Follow the instruction as far as additions and subtractions. So that we know we have added to accounts receivable. I see the rest of these are also accounts receivable and they're subtractions. So subtractions we have bad debt write-off. Okay, bad debt write-off of 1,000. And I'm using a brackets to remind me that it's a subtraction. Yeah, it makes it look like a redundancy, but it's also good reminders. Okay, so I have done this one. I have done this one. Now this one, 12,000. Um, cash collected with discount. Okay, so the accounts receivable. Okay, cash collected, 58,000. and then we converted a note. Okay, so my beginning balance plus additions, subtractions, okay, subtractions, and if I take that in my calculator, it's 13,000. Okay, so once again, let's take a look at the calculator. So this total here is 58, 70, 73. So I can tell that right off the bat that this is 73,000. Okay, subtraction. So 13,600 plus 7,400 minus 73,000 equals 13,000. So I double check the math. It foots. I make a tick mark on my, this could be something that's on my calculator or whatever, but I make some kind of a notation that I've checked my math. Okay. So once again, let's take a look at that methodology for that net amount. So I have 0.02 minus 1. The reciprocal amount is 98, and I take 11,760 and I divide it by 98, and that equals 12,000. Okay, easy method. Okay, this is a way to make sure that when you've done your journal entries, so this one you know that it's not affecting your accounts receivable, and this one is not affecting your accounts receivable. So they're journal entries that were just kind of distractors. So this one may be a little bit more of a concept to know that this, when you have cash sales, they don't affect accounts receivable. They're not going to affect the roll forward. It's incorrect to put the sales amount and cash collected here so that it cancels itself out. No, 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 don't do anything like that. This did not impact the accounts receivable at all. All right. So watch for the distractors and watch for the challenges that you have inside a TBS. Okay, this has been Professor Campbell doing a quick demonstration of the proper methodology to do a roll forward. And this has been simplified. Many of these transactions can be quite complex, as you know. All right, thank you very much. This is Professor Campbell with accounts receivable roll forward demonstration.